Hiren Gada, the Wholetime Director and CFO at Shemaroo Entertainment, joins in to talk about what this IPO could bring to the table for the company and, of course, the way forward as far as earnings are concerned.
That's the key for us, is that cross-platform or cross multiple rights ownership across various platforms, and that really for us makes it agnostic to which platform grows or degrows. For us, as long as the consumption of films, and that, if you see, is a secular trend that people see catalog films, 20, 30, 40-year-old films, even we see today. We all have our favorite films which we've seen many multiple times. So I think that is the central theme, if you ask me.
So who are the anchor investors in this IPO?
We got two fund houses across multiple schemes. So HDFC Mutual Fund and Birla Sun Life Mutual Fund.
You have high debt and high debtor days. Can you tell us exactly what the numbers are in both?
Overall, our debt equity has been about 1.1, more or less between 1 and 1.1. And
debt itself is 150 crore, is it?
Yeah, about 175 odd crores. And the debtor days, essentially the way the receivable cycle works with the industry, and as per industry practice, it is in line with the industry practice basically.
So it's the TV channels pay you late? I mean, who are the guys who are...
It's the, basically, if you ask me, overall, that's how the industry practice
what is it, 90 days?
No, it's upwards of... So what happens is that there's a transaction cycle. So there's a legal due diligence, technical due diligence, etc. And then there's a payment schedule. So all of that, takes it into close to about 9 to 10 months kind of a thing.
So on your revenue growth, it's been quite consistent. You've seen profit growth as well of 10%, I think, over the last 3 years. Is this a sustainable performance?
More than that. Past is more than that. Now, unfortunately, I cannot give forward-looking statements.
Just a trend?
And like I said, it's very difficult to give forward-looking statements. We've been growing pretty well, I would say. And all the industry forecasts, if you see, particularly for the content, as well as the trigger points today, if you see the broadband infrastructure investment, 4G, etc., or the, device story, the technology and device story, because every smartphone, which is, today, sub 5,000 rupee smartphones are millions of them are getting shipped every month. So each phone today is actually a dedicated video player. So you have a fat pipe coming in and a video player coming in. So I think that, these are some of the trends as far as the overall industry.
I still want to know how much you will make, because you will make only on the ads.
Not necessarily. So there are multiple revenue streams and models. For example, a platform like iTunes is a per download model. A platform like Netflix.
Do you have a per download
presence on? So iTunes, whatever content we have put up is on a per download model or a per download basis. There are platforms like Netflix, or in India there are few subscription-based platforms which have a...
Do you earn anything on your YouTube channel?
Yeah, that's an ad-supported model. So whatever ads get served on our content.
Okay, what is a Netflix counterpart? There you
in India still you have platforms like BigFlix and some of the other platforms like Ditto TV and Box TV, which have a blended, you can say a buffet and a la carte kind of. Both models are available. So these are for those platforms, I would say, early days. But I think what we are seeing today is definitely a very interesting, trend in terms of the influx of technology, broadband infrastructure, both.
Okay, just some numbers.
Yeah.
You are raising money through new shares.
Yes.
So there's an equity dilution.
Yes.
And just tell us, what is the dilution? How much money you're raising? What will you use it for?
Sure. So fundamentally, we will be using it for content. And content for us comes in our books as stock. So it's basically part of our working capital. So essentially, therefore, we are raising money to augment our working capital, to invest in content. That's the main object or purpose. That's where bulk of the money will get used. In terms of dilution, so we are raising 120 crores and the dilution at the higher end of the band would be around 26% and lower end would be about 28%.
All right. Thanks so much. All the best with this IPO. Let's get Astha Jain of Securities who will give us her thoughts on it as well. Astha, hi. Welcome to the show. What would your recommendation be to investors?
Good morning, Sonia. My recommendation would be subscribe on the issue. Basically, the business model is quite attractive. It's a de-risk business model, as management has also commented right now. So definitely it's a de-risk business model because multiple platform on which the company is distributing its content. And then again, it is not limited to a single title. There are various titles across, the company has a library of more than 2,900 titles. So there are various titles, various platforms. Definitely it's a de-risk business model, not limited to a single film, not limited to a single content, because they have in their portfolio devotional content. For kids, they have their in the portfolio. For the kids, entertainment content is there. For the health also, they have as a content in their portfolio. So altogether, we find it's a de-risk model, and definitely we give a subscribe on the issue.
Okay, you don't worry about the high debt and the fact that future revenues depend on how ad revenues grow.
As management has also commented that it is in the nature of the business. So definitely, because it's not a business specific problem, it's an industry specific thing. That's high debtor is there in this industry. So definitely it's a concern, but it's not that big concern. For that reason, I cannot give a avoid to this issue. Yes, that's a concern, but going forward, as the investment cycle matures, definitely the company will able to overcome this problem.
So what would you ascribe as the fair value for the stock, and how would you base it on a valuation parameter as well?
Basically, if we look at it,
oops, I think there's some.
From FY10 to FY14.
Can you just repeat that, Astha? Can you repeat it again?
Definitely. If we look at the financial performance of the company, it's very good. CAGR, if we take CAGR, and the bottom line, the CAGR is more than 100% if we take it from FY10 to FY14. And the top line also, the CAGR is also 20%. Definitely, the financials are good. Now, if we look at the return ratios, whether it's return on equity, return on capital employed, these two return parameters are quite attractive. I should say better than the indirect comparables of the company, because they are standing at somewhere around 20% on ROCE level and 15% on RE level. This company is standing on these parameters. Definitely, they are quite attractive. So, fair valuation, which we would like to give, is somewhere around 10 to 20% above from the issue price. Right now, we cannot comment on the actual figures, but yes, definitely, if an investor would subscribe to this IPO on the listing gains, they will definitely get the 20% return. And if we keep this into their portfolio, definitely 30 to 40% return they will get in the medium term to long term investment horizon.
All right. Thanks a lot, Astha and Hiren, for joining us in this discussion.